Currently, we're down almost 163 odd points, understandably because of the weakness that we're seeing in the global markets. But talking about global markets itself, let's get chatting with the first management that we've lined up for you on the show today. It's the manufacturer and exporter of knitted garments. We have SP Apparels in focus. 88% of the company's first quarter revenue, remember, came in from garment exports. And with the rupee weakening, how is it set to benefit the company? And we also have the festive season. So a whole host of things basically to talk about with Mr. P. Sundararajan. Thanks a lot, sir, for joining in. Can you tell us, one, how much does your revenue come from the US? How much of it is from Europe? And with the weakness that we are seeing in both these economies, what is the outlook for this year? Do you still hold that 15 to 20% revenue growth guidance?
Yeah, yes, definitely we are always trying to maintain this 15 to 20% growth, which is always happening. We don't see any issue in this one going forward. And as such, our American business is about 10 to 15%, and the UK business is about 40%, and the remaining is about 50 to 55% will be the rest of the world, which means the European market, etc. And the growth is, yes, so this is the plan. This is how we are working towards.
Okay, so what are you seeing in terms of the overall demand trends? You have across the board, there's been an improvement in your garment division, but just want to understand that what are the trends looking like now in terms of both exports and domestic, and what are you targeting over the next couple of years?
Yes, as of now, there is a big recession in Western countries. The post-COVID, definitely there is a big recession and inflation is happening. So the priority of spending on clothing is coming down. However, since we are in the niche segment of babies and kids wear, I always used to say that there is always a perennial demand for this segment. And we currently have the current order book of close to 400 crores, which is up to the month of January, February. So which means we are comfortable for next 5 months. And in spite of this fluctuating, the currency of pound and euro, still we are playing very safe. With regard to the US dollar, it is definitely advantageous to us. So anything we are yet to book, we will definitely take the advantage of it. And going forward, definitely we look at FTA is on the way, any moment expected. If FTA comes, already the importing countries in Western countries are anti-China, and slowly there are some reluctance in even buying from Bangladesh. So they would be waiting for FTA to happen, so the business to India inflow will be very high. So we are looking forward to that one.
Okay. Mr. Sundararajan, you've said that you have an order book of around 400 crores, so you have visibility for around 5 months. But are you seeing any signs of concern at all in terms of the order book, and hence maybe you would reconsider your business model, say concentrating on other geographies, or maybe looking at the Indian domestic market, considering the kind of demand we're seeing here?
Yes, definitely now we are looking at the other markets like Australia, etc., and other rest of the European countries, and even we are looking at the business in Russia. So we are looking at other demography also. For the plan, our plan will be for the second year from now. So that is one thing. And the domestic market is really doing very good. So our domestic business, although it's in our overall business about 10-15% of the total business, still we have a very aggressive, ambitious plans for the next 3 years to grow the business in the retail, in the domestic retail. Maybe we expect at least double the business in the next 3 years' time.
Can you tell us how much of your forex exposure is hedged, and how much of that stands to benefit with regards to the weakening in the rupee that we're seeing?
So we strictly adhere to our forex policy, where in anticipation, when the inquiry starts, we book 20%, and when the order inflows come, we will book 40%. And during the process of shipment, another 20, and keep 20% always open, which may due to changes in the deliveries or shipment quantities, etc. So any given time, we always have 20% open. So in that 20%, we can take some advantages of US dollars.
Does that mean with 20% being open and you getting the benefit of that, raw material prices cooling off from the top, your margins can expand beyond the 18% that you've guided for?
See, I cannot promise anything. We always maintain 18 to 20%. But currently because of the sudden increase in the cotton price, but that has affected the entire industry. So there could be in this quarter, there could be 1 or 2% slightly lesser, which we are trying to manage. Even with the excess shipments, like. So we can maintain 18 to 20% at all time. That's for sure.
So just to clarify, this revenue growth target 15 to 20% that you had laid out for FY23, you hold on to it despite all that's happening across Europe, right?
Yes, correct.
Okay, all right. And on the buyback, I wanted to understand what's the latest. Are the promoters looking to participate?
Yes, we are, as a promoter, we are also participating in this buyback.
Okay. All right. Just a quick last question, Mr. Sundararajan. Would you look to probably diversify your existing order book in terms, you said geographies, you said, possibly the domestic market as well. But right now, you're solely concentrated on children's wear. Do you think that there's a market beyond that? You would look to diversify into other segments? And if so, what? And any details you could lay out for us?
Yeah, it's a good question. See, yes, our existing customers, they are trying to consolidate their business to the limited factories. So if that's the case, some of the customers already have consolidated enough in the kids and babies. So now they are asking us to take some business of men's and ladies, which are not a big challenge for us, because we are strong in babies and kids, which are the more complex products. So we are planning to take some business of men's and ladies as well as a portion. So gradually we'll also increase that for the future growth.
In the first quarter, you did volumes of almost 15 million units. All of last year, you had done 50 million. So wanted to know how many pieces can you sell this year? That's one. And secondly, on your India business, the retail business that is, you have said in your conference call that you will list it at an appropriate time. Can you define what the appropriate time would be? I mean, at what level of stores, at what level of revenues, and how far down are we? When
a platter of so many products, maybe a product of 40 rupees and the product of 200 rupees. So it all depends. So the quantum will not give any idea about the growth. That's why I say that we can definitely do 15 to 20% growth year on year. No matter. See, sometimes we do more of pajamas, sometimes we may do more of small products of babies. So that's not the right yardstick to measure the growth. So with regard to the retail one, yes, now the retail business is doing extremely well, and especially our retail division is doing very good. Crocodile is there, and we are also into the children's international brand. London brand is called Angel and Rocket one, and also we have Head. Is the skiing and the tennis brand. It's an international one. So we have India license for the clothing as well as for the footwear one. So we are working towards it. Until it reaches a maturity, it may take another about 2 years time. So once we get this maturity, then we will be looking for getting them listed in the retail division.
Okay, all right. So thanks a lot for joining in, and all the best with your future ventures. That's SP Apparels. It's had a decent run. Actually, in the last 3 months, the stock has gone up about 20-odd%. And they stick to their guidance of a 15 to 20% revenue growth for the full year, despite all the challenges that they're seeing in Europe, where they get a large chunk of their business from.